Okay, folks, welcome back. This is our weekend edition for March 2020, final installment for the ICT commentary for Mentorship. Monday, we have at 8 p.m., this is New York time, business confidence high impact for New Zealand dollar. Tuesday, 2 a.m., London Open, GBP has medium impact current account. 8:30 a.m., medium impact Canadian dollar, GBP. 9:45 a.m. US dollar medium impact Chicago PMI. 10 o'clock high impact dollar consumer confidence. 8:30 p.m. Australian dollar medium impact monetary policy meeting minutes. Wednesday, April 1st, 8:15 a.m. high impact non-farm employment change. 10 a.m. high impact dollar ISM manufacturing PMI. Thursday, we have 8:30 a.m. medium impact trade balance for Canadian dollar. High impact unemployment claims for the dollar at 8:30 a.m. on Thursday. Friday at 4:30 a.m. GBP medium impact final sales PMI. 8:30 a.m. high impact average hourly earnings, non-farm payroll change, unemployment rate, which I expect to be ridiculously high. And 10 o'clock in the morning, high impact non-manufacturing PMI. Generally, we have seen in recent months and years actually that the non-farm payroll has been rather lackluster. It's been not a lot in terms of volatility. I expect that to change this coming Friday. There's a lot of folks that actually try to file for unemployment, and the most recent numbers that were released that show 3.2 million unemployment claims that were filed. That's actually not an accurate number. There's many people that cannot, or could not rather, file for benefits because of the unemployment website was crashing. So just expect a number to be astronomical for the unemployment rate, and that is absolutely going to be a driver for this coming Friday's non-farm payroll. So that will be something we'll be watching. Before I get into the charts, I do want to spend a little bit of time, not a lot, just a few moments, commenting on the fact that we are entering a week that is going to be extremely dangerous. The measure of volatility that this week could present should be respected. I know some of you are still sending me emails showing me you're doing trades and such. That to me is foolish. Regardless of your results, regardless of your accuracy, I understand. Okay, but don't do it. Simply don't do it. One of the things as a speculator you want to master is self-control. And while all of you are actively learning price action under my wing in this mentorship, none of you should be in here risking live funds. It's simply foolish. You have no idea what's going to come out next. You have no idea what could happen. No one does. And in a general sense, that's like that always. But the level of uncertainty and black swan events that could come out in this environment could bury you. You have to respect that measure of risk. It's unprecedented. Again, I understand the enthusiasm. I understand the good feel-good moment that you want to send me, and that's any other time it would be great. I like those types of things, okay? But don't do that, because all you're doing is creating, worry for me as your mentor. I don't want to be worrying about. When I give you advice about avoiding risk, I really expect you to follow it. And if you don't, what feeling would a teacher have if the student is saying, here, I'm not listening to your advice. I'm not listening to your instructions. Look what I did. Well, a broken clock is correct twice a day. So probabilities are there that you could potentially see something pan out for you, like anything else. But try not to be lulled. I tweeted this the other day. Try not to be lulled into believing it's safe for you to be in this environment. It does not matter if my commentary is on point. It does not matter if our tools are lending very well technically. That can all change in an instant. In a moment, it could all unravel and you could experience extreme loss. Stop losses in these types of environments aren't a protection. They're a suggested exit strategy. But if it opens and gaps through that several hundred pips, you're dead. It's the way it is. And don't get caught up in that, okay? So with that, let's go over to the charts. Okay, so here's our dollar index, our daily chart. All right, as I mentioned on Wednesday of last week, that it would be better if we were to not completely trade back down into this high. So in other words, if we came down the midpoint here and started the rally, that would have been an ideal scenario. I said also, if we traded down into it, we wouldn't see it at the high here. We would see it at a rebalance and then preferably trade into this buy side imbalance, sell side inefficiency, and watch the order block. The idea also was further outlined in the sense that we could see a potential run down into the mean threshold of this down close candle, and should it close below that, that to me would indicate a potential bearishness on the dollar index. Okay, so we went and closed below it and completely traded through all of the buy side imbalance, sell side inefficiency on here. And we completely closed in the fair value gap here. Didn't have any respect of the open on the order block and traded down through and closed below the mean threshold. Okay, so how I'm getting this mean threshold, 98.34 is what the actual level is. I'm putting the fib on open price down to the close. I'm disregarding the wick. It's not important. The volume is inside of the body of the candle that's making the order block. So we did in fact close below that. The next downside point of concern we have is here. All right, so let me put this here and there, right there, and then there. All right, so this candle's low, this candle's high. Okay, it looks a little weird because the box is doing it, but let me move it back so you can see. Okay, so it's this candle's high. I'm dropping the box on right there. All right, so this is the level we're going to anticipate seeing the dollar try to reach down into, and we'll shade it blue. So this is what we're looking for. Now we do have a volume imbalance right in here. So we want to mark that. That may be a factor this week. So if we get any kind of correction or upside movement, okay, so that right there, we'll change the color of that to red just to differentiate the areas when we go down to lower time frames. Okay, so we're going to look at the move that went through this buy side imbalance and then the return back into the top, or rather the low of this BISI. It gets right up into that, just falls short by 2 pips. Okay, just 2 pips below that. Then we get an acceleration down going into our order block as we outlined on Wednesday. Before I go into the hourly chart, just be mindful of this. The things that I was looking for, okay, at the consequent encroachment of this single up move, this buy side imbalance, sell side inefficiency, the midpoint of that, there should have been some bullish scenario, some kind of a lower low rated, then a market structure move to the higher, and then maybe a retrace back down to an order block or fair value gap, and then expand to start moving higher. That's what I should have outlined on Wednesday, but I didn't do that. But going forward, whenever I say we're looking at this particular level and we're looking for some kind of a support to come in there, that's what I'm outlining. I'm looking for that type of scenario. I'm looking for a lower low that's rejected, market structure break to the upside, then look for some kind of a discount array to trade it back into, and then showing a willingness to show institutional order flow. Okay, so that means all down close candles supporting up movement and up close candles being broken. Okay, so they're not operating as a bearish order block. So that's the definition of my, or ICT, institutional order flow. So a lot of that stuff being talked about on YouTube, and you see a lot of things that they're cherry picking what they like from my content, especially some of the terms. and they're applying it to their pet supply and demand stuff, and it's not supplying, it's not localized, okay, as part of supply and demand. Because if they're going through candles, if they're cutting through a block of candles to talk about something else, that's mine, and you'll be able to differentiate once you've been here for a while. All right, so we have all of our levels in here, and we'll drop down into the hourly chart. So you can see what we have here in regards to that fair value gap and the downside fair value gap that resides still. Notice that the blue shaded box here, okay, again, that is that daily lower level BISI, buy side imbalance, sell side inefficiency, and that occurred in this movement here. On the daily, it just looks like one singular pass up. All of these equal lows in here, relative equal lows, there's sell side liquidity pool resting inside of that, and it's also consequent encroachment in here. That's the level we're going to be looking for potential sensitivity around that 97.10 level. It might bounce a little bit in there, but that certainly is a downside objective. The buy side imbalance, sell side inefficiency occurred here. We went to the bottom of it, extended out in time, went to the bottom of it and just fell short of it by 2 pipettes. We have a small little fair value gap in here. It only went up to close in that, didn't need to come back to this level, but ultimately the narrative was still the same, and the market trades lower. We have an imbalance in here. Okay, so there's an imbalance that exists on the daily chart. So if we trade back up, I don't look at this low as a support broken term resistance. I'm looking at the volume imbalance that they may be the very factor that needs to trade back up into. And also we have a smaller bearish breaker. Equal highs or relative equal highs, low in the center, higher high, then rejection. I goes right to that as breaker. All right, so let's go into a 15-minute time frame. Take a look at that. You can see the breaker a little bit more clear. Equal highs, low, higher high, rejection. Break in market structure. So if it comes back up, fair value gap in here. Also the volume imbalance in that red box. So there's a lot of premium arrays overlapping there. So we'll be looking for that as a potential. If we get any kind of bounce, the stimulus package that they voted for, I kind of alluded to this on my Twitter account. A few weeks ago, I said that I prompted everyone to think, hey, remember the 9/11, September 11th, 2001, terrorist attack, if you want to call it that, on the United States soil. The Twin Towers got hit by 2 planes, and multiple buildings all around them fell down. Not just them. I'm not going to get in here and try to make a case for why I believe it was a controlled demolition to steal $2 trillion and change the whole entire living experience for everyone in America and many people around the world. The world changed that day. But a lot of the things that you don't hear about is there's a loss of $2 trillion that they can't find. They don't know what happened, and they like to pretend it didn't happen. You don't hear about it. Do some research. You'll find that that's in fact the truth. I find it odd that their stimulus package was $2.2 trillion. Is history repeating itself? Don't know. There doesn't seem to be a lot of oversight on this money. And I just think that it's a fleecing again. And I'm just going to leave it at that. Long story short, the fallout of that stimulus package, okay, or the hope that comes from it is yet to be seen. I think the eyes are on the unemployment numbers that's going to come out this coming Friday, and the market's going to use that sentiment to adjust and manipulate as it would normally do. If we get any kind of a bounce on the dollar, that red box is what I'm watching. So anything above that, much in the same vein that I said, if we close below the mean threshold of that bullish order block, which is this line here, willingness to trade above this box, which is again only the daily volume imbalance. It's not a supply zone, okay? It's a volume imbalance, and you'll learn about that if you haven't got to it yet. It's in the content. Trust me, don't email me because it is covered. But the the willingness, if we do see it trade back above it and close there, then this will be just a shallow run below mean threshold, and my initial assumptions about it closing below it, leading to bearishness, may be abated because of that. But as long as we don't do that, the dollar looks like it wants to go lower, and then we'll be looking for it to trade down into those levels there. Okay, so about 97 big figure, and it should be a heavy ride to that. No, or it's not seeing a whole lot of spiky movement. If we get a run up into here ahead of non-farm payroll, that to me is an ideal scenario to expect another level of heavy selling. So in other words, if we just trade bounce around here beginning of the week and then move up into that into Thursday and or London session Friday, that to me would be a prime area to anticipate non-farm payroll to send this bad boy down here. That's what I'm anticipating. That's what I'm looking to see if it pans out. I don't really care so much about anything else about the marketplace this week for the dollar. That's what I'm watching. I'm watching the relative interest to get down to here or back up into this area here. Now, it's not likely that it gets up here because it could be just extremely heavy and they won't allow dollar to trade there. It just might just drift and just go right down in there even before non-farm payroll, which is what it is, and you can't do anything with it. But I'm watching the likelihood of it trying to get ramped up. Maybe you get people thinking it's done, it's had some capitulation, and then that volume imbalance on the daily chart would just rebalance and then send it lower. Okay, so here's Euro. This is our daily chart. And I said we'd watch this bearish order block right in here, and I keyed up on the low and the opening price. I want you to study that as a draw on liquidity. We had a area in here that we were watching to see if there's any kind of significance there. It almost came down to it, found some support. We'll look at that when we go in lower time frames, but so far it's rallied up, and if this does in fact prove to be just a crazy deep retracement on dollar index and say it goes higher, it would need to show it by not breaching this up close candle on euro dollar. Okay, there's a small little tiny fair value gap that resides in here, but if we trade up to that, it looks more bullish than bearish. Okay, if it goes there, and that would mean that we rated this low here and they're sending it higher. So we'll see if the price on euro can stay within the range that defines this up close candle, which in this case we're classifying as a bearish order block. So far we went to the mean threshold here, and it's basically this is the bearish order block, whereas at the same time we're seeing the dollar trade into its bullish order block. So we have to play it by ear on Monday and how we trade on Sunday, and then we'll see what it most likely will want to do. If we trade lower, okay, we do have a fair value gap now in here that kind of like overlaps with this old one there. And we'll extend this out and drop it right there. And drop this one there. So that's our downside discount array on the daily chart in the form of a BISI, buy side imbalance, sell side inefficiency. Just watch the consequent encroachment in here. I'll leave that to you. You can develop that on your own charts. Hourly chart, you can see price came down. Well, it's trading at that level now because we created it, but it didn't quite get down into the fair value gap that was posted before I made the adjustments in here. So that was a little bit of a mistake on my part, but nonetheless, it didn't get down there. It was just like a little bit shy of it and still went higher. If you look at all of these equal lows in here, if the dollar index can find ground and trade back above its volume imbalance on the daily chart, then ultimately euro will want to target this area here and then trade down into the 105s. That's the bearish scenario for euro. I don't see that yet. Okay, I'm looking at the potential of the dollar just going lower because we just put in a huge stimulus package that I don't personally believe is going to have any impact at all. But we have buy side liquidity here. That's the next upside draw. And then we have the liquidity resting above these relative equal highs in here, here to here. All of this, just my eye goes to that. So it could see a run to 130. If the dollar collapses now, if it goes below and starts trading lower, your dollar can go up into those 113.30s, 113.50s in that area. Dropping into a 15-minute time frame. Okay. Consolidation leaves, it comes back, picks up some sell side liquidity, and then expands on the upside. Look at the response in here at the old fair value gap on the daily. Look at the consequent encroachment. That was the tweet I gave you this past week. Price broke down, came back, retested the fair value gap, which is the blue lines in here. Again, scroll back and you'll see that level and what these are on the daily chart. And the market breaks down, fair value gap returns, bearish order block expands down. This level, this box here, was an adjustment. So I'm actually showing this level as a current new developed fair value gap. So don't think that this is the reaction here because it hadn't filled this, it hadn't created rather this range. Relative equal lows, sell side liquidity, hits it, bang, runs up. Retracement, rallies back up, fills in a SIBI here. Becomes a balanced price range. What makes it a balanced price range, Michael? The fact that we have a down close candle inside this candle's low, the up close candle, green one, and then the next up close green one here, that high. Okay, so the low of this candle and the high of this candle, that creates your fair value gap in the form of a SIBI. Sell side imbalance, buy side inefficiency. Extend that out in time. Price runs back up, fills it in, and trades back down again. So we have imbalance, rebalance, balanced price range because it's going back and forth inside of a pre-existing imbalance. Okay, so now this becomes a balanced price range. So it's going to be much more supportive. Any movement above these down close candles when price, if it does trade back down to the down close candle, that will be a high probability bullish order block. And you see that happen here. And the market expands on the upside. All right, so there's your lesson for this video because it's not going to be a long one. The upside, as I mentioned, at 113.30, 113.50, if we get some real crazy expansion on the downside on dollar, that would be my upside objectives for euro. But we still have to play it by ear because euro is in its daily bearish order block and dollar index is in its bullish daily order block. So we have to give it some room to maybe make an adjustment and reject. If it doesn't reject, then everything I've outlined thus far in this video should materialize this week. Okay, so here's cable, British pound versus US dollars, their daily chart. Big distribution in here, came down, cleared out sell side liquidity. I mentioned that I didn't like this low as a return as broken support, term resistance. My attention was better at, or not better, but more focused here. We did trade up to it, and we traded into our fair value gap here in the form of a SIBI, sell side imbalance, buy side inefficiency. Ended up closing above it. That's always going to be bullish. And then we have this expansion up into the next fair value gap, which at the time of this recording, I don't really recall me saying anything about that one. I know I saw it looking at the chart, but I mentioned primarily this one here and the overlap with that. So I'm just going to not kind of take any credit for this because I'm almost certain I didn't say anything, but if I did, then whatever, but most likely I didn't. But I find it interesting, it went right up into that and closed that in and stopped it in its tracks. So that would have been the next premium array. And again, all of that was on the heels of this stimulus package that was put in place for the dollar or the American economy. This area here, we traded right on through that level, right on through here. So we had two fair value gaps completely rebalanced and then still expanded on the upside. So this is actually very huge. These are big moves for cable. And this is what I mentioned before. If you don't know what you're doing, okay, you can really get hurt, especially if you are one that doesn't want to use a stop loss or doesn't want to admit they're wrong. And you hold on to a trade and you hold on to a trade, think it's going to turn, and it just completely blows you out. That's classic cable. That's what it does. That's why I love the pair. And while it's creating some phenomenal moves in here, I'm very content with sitting on my hands because I just simply don't trust, even with my ability, I don't trust the scenario. I don't like the situation, the circumstance, or the climate. So therefore, I'm sitting. Let's look at the hourly chart here. You can see The fair value gaps in here that I outlined, these dotted lines are just simply the consequent encroachment. All I did was take the fib, place it on the upper level and the lower level line, made sure it matches with the numbers and the adjustments when you do the fib. Make sure it matches this level here exactly and this level here exactly, and then where the 50% rather would reside, I drew a line in that just to indicate that is consequent encroachment. Price trades the consequent encroachment here on the 25th and retraces back above it, finds support at consequent encroachment, and then expands up, consequent encroachment of the fair value gap in here, consolidates, recapitalizes again now, and sends it higher up into. It just fell short of it by a little bit. Looks like it was maybe, I don't know, what is that? It's hard to say what that is actually, but it just fell short of it. It didn't quite get there. This area here where we consolidated, we can look at this low to this high, add it to the low in here, and we could say potentially reaching a little bit more on the upside, but we'll see what happens on Sunday's trading and into Monday. 15-minute time frame. Again, really nice support ideas off of their fair value gaps. And again, it's not supply and demand zones, okay? There are very specific price levels we're looking for, and then we split those levels in half, and that gives us consequent encroachment. Much in the same way that I give with my bullish and bearish order blocks, the midpoint of those is mean threshold. So whenever we're looking at gaps, okay, gaps are in the form of like this here. This wick, that's a gap. Price goes down and then completely comes back up, so that creates a imbalance. It runs for liquidity and comes back, just like it does here. Okay. When we look at gaps, the midpoint of that gap is highly, highly sensitive. And the theory behind that is whatever makes the fair value gap low, whatever constitutes that low forming, we don't need to know what that is. We just need to know that that's the low of the gap. But when we come back down into it, the midpoint is highly sensitive because willingness is the traders will expect it to go down to that low again because it bounced before. And that's why I'm not a fan of classic support and resistance. This was the concepts that I used in my discovery of these things that you're learning from me, is that all of the painful lessons that I lost fortunes with real money, that was hammered into me because I used all these theories before. Okay, well, it bounced here, so now the book said it should come back down here again. It's not how it works. So I had to quantify a way of determining what would create a reasonable retracement, and also it has to repeat in a generic format. It over and over and over again keeps repeating, and there was the birth of my fair value gap and then consequent encroachment. I don't want to see a imbalance or a liquidity void or a price vacuum or whatever you want to call it. They're all the same thing. I don't want to see those things actually completely fill in, because if they don't fill in and they find support at the midpoint, or as I just describe it and teach it as consequent encroachment, that's actually the better scenario. That's why I don't trade or teach Chris Lowry stuff, and he didn't invent liquidity voids. Okay, that stuff was before him and it was before me. Okay, and they were always referred to as price vacuums. So again, a little bit of a history lesson there. So looking at the consequent encroachment here, this reaction here that sent this higher, if we get some bounce on dollar, say it goes higher, all right, the cable market will want to go below this low, and not just below this low, but it'll want to clear up all of these equal lows here and look to the left of these, and you get this fair value gap right there. So watch this level here at the high at 2087. So 2090, 2085. That could be a sensitive level. If we do drop down with bullishness on the dollar, that would be the only near-term area I would like to see it bounce at, and then we'll see what we get there. But if it accelerates through that, all eyes should be focused down here on this, and it would clear up all of the sell side liquidity resting below these relative equal lows. So it's a lot of play it by ear this week. I can't stress it enough. It's just, we're entering a new month, so volatility is always going to be a major factor. Monday and Tuesday and Wednesday, New York Open. If you don't have any positions, usually by then we don't assume any new positions. I don't think that's going to be the case this week. I think that volatility is going to be all over the place, and we're probably going to see pretty wild price swings, especially on Friday. So, or if they come out with some crazy number, New York is, completely ate up with this virus, and other states like Louisiana. Expect that to be another big area, because they allowed Mardi Gras to just pass it around, and to hear them say, "Well, we didn't know, nobody warned us." Come on, everybody was talking about it, last week of January, but because it was on the other side of the world, nobody thought, well, it ain't going to matter here. So we've seen that, and if Trump opens up our country to roam and free anywhere, to me that's stupid. So I think that if we are smart, we will not remove the social distancing protocols that are in place. And I look at it this way: if they're willing to throw trillions of dollars, okay, to support the economy, okay, then they'll write more to support the economy for a longer period of quarantine and take the economic hit. Because if the country really is looking out for its citizens, then everyone, put a freeze on all debt. No payments need to be made. No utility payments, no car insurance payments, no nothing. No mortgage payments. I don't know if I said that already. All debt payments should be more or less stopped. They shouldn't be requiring citizens to pay those living expenses. So that way, it's not important that they go to work, okay? There should be lines of credit opened up for food. That, to me, is something that, citizens can come back, and when they go back to work, they would be expected to pay that back. And that, to me, is a stimulus idea that makes sense. If they don't pay it and they have a refund due to them because of tax income, then they could forfeit that if they don't pay their food credit. Now, these are all ideas which some of you may agree with. Some of you think that's even more stupid than some of the things you've heard Trump say. But I have been thinking this entire week, like, what could we do as a world, not just in America, but what could they do, to allow or help, keep this thing going in terms of beating it. And it's not going to be done by Easter. It's not going to be done by the end of May. We're in here for a while. So to me, this week coming, we have a lot of factors, a lot of new claims for jobless, and we have a lot of new cases for COVID-19 that's going to come up. And now we're starting to see the younger folks pass away. 17-year-old young man was denied, apparently, service and treatment because he had no insurance, and he had cardiac arrest on his way to the ER. So it's not an old person's problem, is it? Let's go over to E-mini S&P, and we'll wrap this up. All right, so here is the E-mini S&P, our daily chart. Let me scrunch this up a little bit so you can see what these levels are. So we have our buy side imbalance, sell side inefficiency there, our old low, buy side imbalance, sell side inefficiency. Okay, and I mentioned on the weekly chart, go back and watch Wednesday's video, you'll see what I'm talking about here. It was actually unable to get up there, and made a really adverse reaction that I feel it was... the market didn't care, basically. You would have expected the stock market to say, wow, come out here and buy stocks. Our country's going to support everything. And the stock market said, I'm not really interested. Is this the initial reaction that programs and primes the sentiment, thinking it's going to sell off even more? While I do believe that this isn't the low yet, I think we'll make a lower low. The fact that we closed right on top of the old fair value gap, which is, again, extended out in time, cutting through all these candles, Sam. Do we bounce here and then resume? If we do, I'm watching this area here. Okay, you don't see it here on the daily chart, but on the weekly chart, it is. I have to do it now because you're probably asking, Can you just show it? There's the volume imbalance. Okay, so it's just one wick and no candle bodies in that area. Okay, so that's a volume imbalance. They tend to fill in, or at least trade back to its consequent encroachment, and we'll be expecting that if we get any upside. Trading above that sends us right back to here, and that would be a volume imbalance, and then I don't think we'll go above that. I don't think we'll go there personally. I don't think there's no reason, absolutely zero reason for stocks to go back up here, because companies are still shut down. Fruit of the Looms that makes underwear, they're making PPE devices now. Everything's changing, but they're not making their high dollar items. Okay, in other words, their core flagship products. So anytime I hear these people on CNBC talking about how it's turning, or we've done it, we've placed a low in here, or Warren Buffett's come out there, okay, or the Ray Dalios that got their clocks cleaned by this move and said that he didn't even see it coming. We saw it coming. So what happened, Ray? These people are full of it. Okay, you can't trust these individuals. You can't trust them. You can't believe them. So don't buy into any narrative that it's safe now to go and buy stock, or even nibble, as they say. Just go in just a little bit, scale in a little bit. No, don't do any of that. Don't do it. Don't do it. All of this in here is just a small little hopeful prayer that we've made this low in here, and I don't believe we have. I think that we're going to still. I think we're going below 1,000 on S&P. I'm just going to keep telling you, because I honestly believe that's where we're going. This fall, when we go into October, November, it may be that time, unless something amazing comes out in terms of, or drastic, not amazing, but drastic comes out in terms of how many people are falling. We're not getting accurate numbers. We don't have testing kits to show, and that's the whole PR spin on this, in my opinion. They don't want the number of cases to be really known, and they're hoping, because they keep using you get a lot of mild case of symptoms and such. They don't want to test it because, again, that's just going to be a negative impact on the sentiment in the market. And he's already lost. I'm referring to Trump. He's lost all of his stock market gains. He's destroyed by the unemployment numbers. His whole campaign, okay, his whole entire campaign, the two support structures that he had, they're completely decimated. They're gone. So, what's he have left? His response to this COVID-19 disease and virus. Well, he hasn't done very well there either. He has a track record of saying, this is nothing, it's a hoax, it's a Democrats' hoax, it's this, it's that, and now he's threatening to put legal action against channels that run that ad that just simply give him a timeline of what he said. And there's nothing wrong with that. I think it's actually accurate. And people need to be reminded of that. This is the chief officer of our country. And if he's putting that stuff out there, how's he any different than CNN with their fake news? He's fake news. So it's all corrupt. You can't trust your government. You can't trust these people. You absolutely cannot trust them. They're all puppets. Every single one of them are being manipulated and told what to say. And if they don't like it, they put the squeeze on their family. If you don't believe me, look at John F. Kennedy. Nobody's allowed to be a cowboy. No one. So, I had to put a little bit of rain in there, guys. Sorry. The down close candle here on Friday. Let's take a look at that on an hourly chart. All right, so here's an hourly S&P. And again, the symbol I'm using for this is ES number 1 exclamation point. Okay, so it would look like this is what you're actually going to key in. So this is what you put in for TradingView, okay, and you'll get what I'm showing you here. That's the continuous nearby contract. It's not the March or June contract. It's a collective, cumulative tracking of whatever the nearby contract is. You can't trade this. You have to trade the futures contract of June 2020 now, because the March contract is no longer the one you would be in. These equal lows in here, to me, are just too easy. They're ripe for the picking, and I don't see it going down there on a shallow basis and then rejecting going higher. I think we're going to go deep. We're going to run through these eventually and go deep into the 1700s and expand into 1500s, and maybe by September and November in that area reach as low as below 1,000. So that's my time horizon. That's how far I'm looking out and what I'm expecting. I don't think we're bullish at all. You know, we're in real trouble financially, economically, and we're going to see a lot of things that's going to be painful for a number of years. It doesn't mean trading is out the window. It doesn't mean Forex is dead. Okay, I think everyone needs to understand that this is a ridiculous level of volatility, and it's reasonable to expect it, and it's not going to go away quick. And it does not remove the validity of trading Forex. Should I abandon Forex? Should I forget about ever being able to be a trader? I don't think we're there. Okay, I don't think we're there at all. There's, even if I have belief that we're near the end, okay, of everything, it ain't going to happen in a day near to come. You know, we have years before that would actually take place. So trading's still something that my interest is in. Okay, whether you guys stay here in a mentorship or whether you want to trade or not, you know, I'm in here looking for it. But I have to wait for things to settle down because I'm not going to risk it. So the lower level lows in here, I think, again, that'll be the draw. How we trade this week here below these lows, how fast we get down to here, that'll be an indication of what we see in terms of the next leg lower relative to its daily chart. I'm absolutely not bullish. I've mentioned this several times. If we reject and trade higher into here, I'll be looking for that volume imbalance to kind of like cap the market. And to me, I'd like to see it not trade right from Jump Street on Sunday going lower. I don't want to see that. I'd like to see it, because this is really convincing on a lower time frame. I'd like to see them ram it up here and take out the relative equal highs here, because there's a lot of people who want to sell this. They want to short it, and they are short. So by letting price come down, it builds more shorts and stops right above these equal highs, or again, relative equal highs. And also the liquidity that sends all of the buy side liquidity above in this imbalance. So there's a lot of big banks waiting to see if they can get this price. If price can get there, I personally believe that they're going to be loading up the boats to send this thing lower for months. So that's what I'd like to see. But if we just completely break down and run below these equal lows, then this volume imbalance is going to stay intact as a breakaway gap, and then we'll still keep our focus down here. Okay, 15-minute time frame. Again, look at this. Is just too clean, too pretty. That's not, to me, very convincing in terms of support. So I think we're going to dip below 2,400 and then make a case to go below 2,000 eventually. We might get it with the economic new data that's coming out this week. Or if not, it's most likely going to do it the week to come after this one. I expect a lot of numbers to jump in more states, and New York to be even worse. And then we'll, the final folks on the outer edges thinking that this is just an overdone scenario, I think they'll come to a sober view of how bad this really is. So, and they will weigh on the marketplace. There's a lot of people are holding stocks and wishing they're listening to the Kramers, they're listening to the the talking heads on CNBC, and they're reading their Barron's and their Wall Street Journals, and all these folks are just looking for some reason to justify holding their stock. And when that last bit of hope is dashed, and I believe it will happen this week, they're just going to just sell, and you're just going to see an acceleration on the downside. And there's two large pools of liquidity around that 2,400 and 2,200 and then below that it's Free Fall City, down into the 1700s, 1750s, and then 1500s, and then making a real straight shot right into sub 1,000 on the S&P. So one of the things I want to close on is this. We have seen almost 3.5 years of the Trump reign, okay, his administration. My focus is on how he leads and how he speaks and what he does and what he doesn't do now. We've been conditioned to believe that anything derogatory said about him is fake news. And admittedly, that it's many times it's like that. Okay, many times it's been like that. But I think criticism against him now is warranted because he's making jokes. You know, he's trying to be lighthearted with things that shouldn't be lighthearted. And understand this: I'm Republican. Okay, I'm not a Democrat. I'm not a rhino. Okay, I have documentation of me saying that I believed that Trump was good initially coming in here because he's a maverick. He's a rebel. He's not a politician, and he upset a lot of things initially. But now, when it's important that we have a strong leader and one that has a sense of candor and couth and just common sense, we don't have that right now. So all of the folks that are supportive of Make America Great, or make America Stay Great, or whatever, there's Keep America Great, I think is what it is. We're in trouble here. And no matter who you put in office, they're going to be dealing with this. So I made a comment on Twitter, so I want to clarify this, and then I'm going to close. I said that if we look at the way we are right now in terms of the country and what we're dealing with, I'm not pleased or comforted by Trump right now. I'm not. I think one of two situations are going to pan out. He's going to continuously get worse at what he's doing, and he's buried himself in terms of his management of this. He said things he should have never said. He come out there thinking it's a rally, saying stupid stuff, and it's a beautiful trend line of how he viewed this whole thing. And now that's devastating, because he doesn't have the crutch of the stock market gains. They're gone. He doesn't have the jobs. They're gone. And the website only allowed 3.2 million jobless claims to come out or be filed. Now these numbers are kind of like backdated a little bit also, so there's a little bit of fluff in there. You're going to see in May, when we have the May unemployment numbers, that's going to be a more accurate depiction of how bad this really is. We will see most likely all of his jobs, if you want to say that's what he created, if he created those jobs or not. All the jobs that were created thus far in almost 3.5 years of his administration, they're about to be wiped away too. So what does he have to stand on? What can he campaign on? If it's Biden and Trump, Biden will trip over himself because of, well, just look at him. I'm trying to be respectful. If Bernie finds his way, to debating with Biden, I think he could win the Democratic seat against the will of the Democrats, because they don't want him in there. He's staying in as long as he can, but if left to Biden and Trump, I don't trust this environment not to have the numbers messed with, because we have so many distractions going on. Also, if it's Biden and Trump, or if it's Trump and Bernie, either one of those scenarios, I don't think they're going to allow an election to take place. Trump just called up to 1 million reservists. The idea was not to require them longer than 2 years. Wait a minute. We're talking about having Easter open up the country. If not the entire country, some places. Now he's calling up up to 1 million reservists. And they're being told that not to last longer than 2 years. You can't believe what they're saying. You have to judge them by what they're doing. Okay? This is what I said, and this is what I've been talking about on Twitter. I don't want to be an alarmist. I don't want to be a fearmonger, okay? But at some point, you have to manage this with common sense. This stuff is not just going to disappear magically one day, okay? It's not going to happen. They are allowing states to be having rogue leadership, like in Rhode Island and in Florida, Louisiana. We didn't know this happening. Nobody told us. I'm not going to let my state be like China. We're not going to do this. I refuse to have my people go in shelter in place. Well, those people need to be removed from office. So, I know I told you I wasn't going to have all this stuff, but folks, this is too many things for me to write down in a post, and it's at the end of the video, so I'll have to make sure I put a flag on the video. If you don't want to hear the rants, don't listen any longer. But I believe that we are not going to see the general election in November. I think that that's the reason why the military is being brought in, because the left is going to lose their minds, and those that are supportive of Trump are going to be like, okay, well, this is what we wanted anyway. Trump 2020, Trump 2024, Trump 2028. You know, they don't care. They don't want to see him leave office. And I wouldn't be surprised if that's what happens. And it's going to be under the context of it's too dangerous to let people move to a poll. You know, think about it. They've tossed around the idea of potentially allowing mail-in ballots. Well, if that happens, that just opens up also another realm of voter fraud. So to battle all this stuff out between now and November, it's just easier for them to say, well, we're just going to postpone the election. Okay, till when? I don't know. But that's what I'm expecting. Do I have anything to base it upon? Just the things I've told you. To me, having the military build up, and I see some of the comments, and I've got emails from people too, and I know you're being respectful in the way you're responding, okay? But I don't see it that way. And it may be because, I'm just always wearing a tinfoil hat. But it's been years since I've shared my views because pretty much it's been quiet. The last 3.5 years almost, it's been pretty smooth sailing. But look how fast things changed. And I think we're about to see it get worse. Exponentially worse. So again, that creates opportunity, and it may be in the form of commodities, but you don't need to have a whole lot of money to trade commodities. You can trade the options market. And I know a lot of you don't have a lot of money or willing to risk a lot of money. Options are a viable vehicle, and it allows you to have a limited amount of risk, but by theory, up to expiration, unlimited profit potential of the option. So you're still able to lose money, whatever you pay in commission and premium for the option, but it doesn't remove opportunities. It just changes the environment in which they are presented. And we may have to take a step away from Forex for a little while, and my focus will be on the agricultural markets, because if I am correct, if I am right in my idea of this trend that may be forming, say the dollar just completely falls out of bed and goes lower, that is going to drive the commodity markets higher. It's also potentially going to increase costs of food. And We are the nation's, the world's grocery store. They buy our corn, they buy our wheat, they buy our livestock. I mean, think about it, folks. People need to eat. And if there is a short supply of it, and money doesn't have the buying power that it did at one time, costs of things go up. And, if we're all told that we have to stay in our house, who's taking care of the crops? Who's taking care of these things that need to be maintained, these commodities, these livestock and grain markets? That, to me, is going to be the next big bull market. If I'm right about the dollar collapsing and shelter in place becomes a nationwide thing, and they just don't get a handle on this virus, it just keeps getting worse. And again, I'm not trying to say doom and gloom. I'm not trying to say, because if you haven't picked up on it, I'm trying very carefully how to use and pick my terms and words, because I am very cognizant of the perception that some of you may take in this. But understand this. I've already stated I am not in any trades. I am not taking any trades, but I would take them in the commodity markets should we get indications that what I'm hinting at may develop. I will absolutely be in there trading those markets, because they will see lock limit moves up. And that means what we're seeing, like sometimes in the S&P, where it goes down, lock limit, it can't go anymore. That's a fun feeling when you're right. You're stuck in a market you can't get out of, and you're making money. So you couldn't even get out of that to take profits in those types of environments. This could eventually develop into that type of market for soybeans and wheat and corn. Okay, and there are markets that are quiet right now. Option volatility is low, and it'll allow us to go in and buy $50 a bushel, call options that are way out of the money, and they'll be relatively cheap. And then to see them, potentially go, theoretically and hypothetically speaking, if things like this I'm outlining come to pass, we could see huge moves, $5 to $10 moves in the grain market. What does that mean? Well, each $1 move is $5,000 per contract. So it could potentially, offer a lot of quote unquote theoretical profit, but there's a lot of things that have to happen before that comes to pass. And that's what I'm watching. It's not important for me to talk about it every single day looking at it, because all it's going to do is build an insatiable desire for you to be wanting to look at those markets when they're not really yet primed. Okay, so I don't want to bog down or dilute your attention from the things that we're watching now, which are very specific and focused. And I'm not broadening. I'm not trying to ring in gold. I'm not trying to ring in oil. I'm not trying to bring in all these other currencies. Okay, I want to keep your focus light, because there's a lot of news coming at you every single day, like it is with me. We have to look at it. We have to process it, and it's difficult. So all you're going to do is add more plates to spin, okay, and manage, and all it does is again, detract. It's not something you need to be doing right now, focusing on a very, very short number of markets. We always look at dollar, we always look at euro, we always look at cable, and I've brought in S&P because it's salient right now. It's significant. All eyes are on stocks right now. So that's about all I got. Everything else I would say would be a lot more tinfoil hat. I think what I've said thus far in this video was pretty sober, pretty balanced. It wasn't too lunatic fringe. But in all seriousness, though, this week, be very, very careful, because I think we're going to start entering the exponential ramp up of the numbers. We started seeing it last week, right on cue. It's what we would reasonably expect based on what we saw in other countries. And Italy has been having crazy number of deaths. So I know there's a lot of people out there that are trying to still defend this whole thing, saying, well, they're adding the people that are dying from the flu, or they're adding just natural deaths in there too. they're not beating this virus yet. That's the point. Okay, so I know that numbers on all these countries are not accurate to the actual head count. I don't have any faith to that degree. I want to remind you folks, when I first saw the whole news about the virus, I readily admit, in my rush to view and analyze and try to figure out what it is, I believed it was a fake narrative. I believed that for a day. Then I started looking at more data, and I stopped talking about it because I wanted to know more. And as I dug in deeper, more things came to fruition. A lot more things came to light. And then I wanted to see if it would make its way outside of the country of China. And it did. And, we have to deal with it. And I'm hoping and praying that none of us catch any of it, or even the mild symptoms of it, because I'm sure it would be rather unnerving to know that you're fighting something that has led to other people passing away. Healthy people, not just old people, healthy young individuals, athletes. They're being put in comas and a ventilator put on them. That's terrifying. And anyone that says it's not, they're just disconnected, and have no idea what it's like to empathize for someone that's going through that, or having a family member going through it. So I'm praying for all you, and hopefully, we do get through this in a relatively short matter of time. I'm sick of it. Like, I'm burnt out by it. It's all it is this. So I'm trying to find a way to be upbeat on Twitter to kind of like break up that steady flow of bad news. I will talk with you all on Monday by way of Twitter. If I see anything between now and then worth sharing, I will send a link or draw your attention to it through Twitter. Until I talk to you then, be careful.